the top 5 stocks to buy right now during the market crash.
Changes in Trump tariffs are making the market uncertain, and markets are selling off some of the greatest companies in the world, and yet some of them are even getting fundamentally stronger. I have one very key rule whenever it comes to investing in the stock markets, and that's buy great companies and hold them for the long term. Pretty simple. In today's video, I want to talk to you guys about the top 5 companies that I'm purchasing with some objectives. They have to be growth-focused technology companies that are focused on the long term and potentially undervalued based on their future growth. So first up, let's talk about Nvidia stock. Nvidia creates the most powerful chips in the entire world that are fueling not only the AI revolution, but the revolution in autonomous vehicles, humanoid robotics, and every specialized robotics in factories, and essentially every aspect of every industry in the world. Even the largest, best companies in the world are spending massive amounts trying to get a hold of Nvidia chips to then further their growth in artificial intelligence, as it could have massive potential growth for their companies. And that could be the case for years to come. And Nvidia is going to make up for a very large percentage of that overall spend because they have the best chips in the entire world. Now, the thing that's held back companies like Google, Amazon, and Microsoft has been the total amount of chips that they actually have. It's what every single one of these companies complained about, was not having enough capacity. That's what constrained them. But Nvidia can offer that solution. And this is what enabled them to grow so fast in recent years, and Wall Street expects this growth to continue going forward. And yet, in my opinion, these numbers could actually be very low. If you take a look at the history of Wall Street's predictions for Nvidia, they have only raised them over the past couple of years, as they've had more excitement about the future of artificial intelligence, not worsening, only improving. And with all of this recent success, they don't want to sit on their hands and do nothing. They want to continue to reinvest this money into better talent, better infrastructure, and also giving back to shareholders. And even though we're in phase 1 of this artificial intelligence boom, this is the cheapest you can get Nvidia stock based on their earnings over the last 5 years. And yet, if we include their future growth...
Okay, hang on. There's a fundamental problem with that. Can anybody spot what the problem is? This is the cheapest you can get the stock in the last 5 years. Yet, all these reasons why the stock is such a great deal, right? This is where I see lots of flaws in these plans here. This company is so outrageous. This company is amazing. Can you believe that it's the same price that it was 5 years ago? But it's amazing. It's such a great deal. I mean, you've got to buy now because it's the same price it was 5 years ago. Do you see the breakdown there? Like, if it's such a great stock, if it's so amazing, why are we having price the same as it was? Well, it must be like PE or something. I don't know, some random thing. But I mean, if we're gonna look over time here, June 3rd of 24 was the last time it was at this price. So I don't know. Point being is, if it's so great, if it's so amazing, if it's such a screaming deal, why is it the same price that it was May 30th of 2024? I don't know. That's something that I just don't get behind. When people get so stoked about a stock saying it's such a great deal. Well, if it's such a great deal, why is it the same price as it was, a year ago? I don't think that's a great deal, right? Imagine this is your house, okay? Imagine this is your house, and you see the price of your house going up and the price of your house going down, and then you look and you say, oh man, my house hasn't appreciated in value any in the last year? Huh, that sucks. Imagine it's your 401k. Oh man, you're telling me over the past year, my 401k, I've been doing everything right, and my 401k hasn't gone up at all in the last year? Do you see the problem with that, right? Assets are investments, which should go up in value. Consumables should go down in value. Consumables, meaning like bullhorns, right? Like phones, like DuckTales coffee mugs, right? These should go down in value over time. If you're looking at investment and the investment is still at the same price that it was a year ago, that's not an investment I want to own. Right? That's not an investment I want to own, right? Because the stock can be great, the company can be great, but the problem here is that all stocks are bad. All stocks are bad, and it's because they have market risk associated with them. So that's really disappointing. That's really disappointing. Now, is now the right time to buy Nvidia? I would say not yet. Has it found its bottom? It really may have found its bottom, right? We see that it bounced right out this order block right here. We can see it showing a lot of strength over the last few days. In fact, over the last few days, bottom to top right here. Good gravy, 30%. Nvidia's up 30% since April 7th, 2025, year of our Lord 2025, to April 14th, 2025. It's up 30%. Wow. That is crazy talk. What can I say? That is crazy talk. I can say there's something on my jacket. That's what I can say. That is crazy talk. Does that mean that it's going all the way back up? No, but that is a good sign. It is a good sign. You've got your 10 still under the 20, price is still under the 50. But if it continues with this trend here, if it continues with this trend, it actually could. It actually could start trending upward. But as of right now, this is still a bearish trending stock. And you got some overhead resistance here around 118. So we'll have to see. We'll have to see.
You can get Nvidia stock based on their earnings over the last 5 years. And yet, if we include their future growth, we see a price to earnings growth ratio of 0.59 times, a historically low rate for Nvidia and historically low rate for the.
That doesn't look good to me. Does a chart like this look good to anybody who invests for quote long term? Not me.
The entire stock market. Legendary investor Peter Lynch said the golden indicator for finding undervalued companies was the PEG ratio under 1 times, and yet we are finding it at 0.59. This is absolutely incredible. But next, I wanted to give you guys a bonus stock. This is not one of my top 5 and not currently a company that I hold, but one that I'm actively looking into potentially starting a position in. First up, we have Uber stock. Now, Uber is in a weird position right now as autonomous vehicles to a lot of investors seems like the ultimate threat to their overall business. But Uber says, no, we're actually partnering with these companies, and that this could potentially increase the total addressable market of our entire industry as it lowers the cost per mile, as we don't have to pay couriers and there's no tipping involved, so it makes the rides very cheap. Now, they think that this is roughly a $1 trillion opportunity, and as the opportunity or the total addressable market continues to climb, they continue to add on new features and products. But there's 2 problems. One, the total addressable market is only useful to Uber if autonomous vehicles choose their platform. And the total addressable market is only useful to the autonomous vehicle manufacturers if people have a way of using your cars. So are they going to download potentially 10 different apps for 10 different automotive companies? Or are they going to have a platform that already solves every single problem that these companies need while offering additional markets through different services, already with 200 plus million users already baked in? I think the clear example is already what's happening with Waymo. One, they rolled out Waymo One, their own app in San Francisco, and that did actually end up growing to over the total usage of Lyft. Whereas they rolled out with Uber in Austin, Texas, and Austin, Texas saw a much faster adoption rate, 80% faster than what they saw in San Francisco. But here's where Uber's stickiness really gets baked in, and that's memberships. If you can offer a customer based on how much they pay you a month to give them exclusive cash back, like currently 5% cash back on what they spend, then they are not going to want to use different applications if they get rewarded more for using one specific app. So more.
This is somewhat like the Costco model, right? I just went to Costco yesterday. What did I need? I needed to get 4 bottles of champagne for Easter because we roll like that, and some like drinks, right? Some kid drinks, some Cokes, things like that. Because in Texas, everything is a Coke, right? What kind of Coke do you want? You need to get some Cokes, and I spent $200 and something on drinks, right? But Costco gets my executive whatever membership for $119 a year on top of that. So I think that may be more beneficial to them than saying, here's $5 back here and there. I don't know. But let's go look at the Uber chart real quick. Let's go look at Uber. Hey, similar to Nvidia, right? We've had some huge movement up. In fact, what is it from the very bottom to this right here, 21%. Some of these stocks are crazy. Order block right there. Tell me order blocks don't work. When was this? December 2024. First time it comes down into here. Boom, right back up. Tell me order blocks don't work. You can't. Anyways, remove this. Let's take a look at this. We have price well over the 50 at this point. So if in the next couple days, if it can stay strong, you'll see that crossover right there, and it could be in a bullish trend. But you do have this overhead resistance right here. So Uber is not the worst one I've seen. Not at all. In fact, Uber is pretty decent to me. But it's going to have a hard time fighting through this order block and that order block and that order block, right? It's got a decent amount of overhead resistance. So let's continue on. See what he has to say.
or percentage of their total drives end up going to that specific app over using whichever app is currently offering the best price. But that's just autonomous vehicles. Overall, Uber's business is doing great, outperforming their expectations for the 3-year guidance. And if autonomous vehicles do come in, this could greatly improve their overall economics as operating costs will continue to fall. Revenue is growing in every single geography, making more and more users use their app over their competitors. They're seeing higher profitability on a net income perspective and free cash flow perspective. And you can get all of this for a PEG ratio of 0.72 times. So if I don't buy Uber stock,
hang on.
Flow perspective, and you can get all of
So price to earnings growth, right? This is not good to me, right? This is not good. Price to earnings growth, right? So first off, we've been sideways since February of 2024, right? So February 2024, we've been sideways since then. Wouldn't you want your price to earnings growth to be going up higher and higher? This is not good. Anytime someone shows you a chart that's going down and be like, oh, what a great deal, you should look at them and be like, what is wrong with you? What is wrong with you? So yeah, I can get behind it in the short term, right? Because that's the way that I trade. I look in the short term, 3 weeks or so, give or take, is where my head is at. And I think that this has some legs, but as you can see right here, right, it's really struggling in this area. I think it's going to bounce between 80 and 60 for a while. Can you make money between 80 and 60? For sure. You can make a good amount of money trading between 80 and 60. I just don't know. It's going to take a while for it to figure out what it's going to do.
this for a PEG ratio of 0.72 times. So if I don't buy Uber stock, potentially Uber will, as they're using their profitability to purchase back their shares and artificially increase the stock price. Next up, we have SoFi Technologies.
Oh no, he's a SoFi bro. He's a SoFi bro. Bro, I wouldn't buy SoFi with your money. No way. SoFi has, in fact, the receipts are on YouTube, by the way. I was telling everybody who would listen, don't buy SoFi as it's going right up into these order blocks, which will be available in OVTLYR 3.0 coming out by the end of this week. I was telling everybody, do not buy SoFi as it's coming right up into here. But all the SoFi bros, all the YouTube channels, so we covered them on our channel, we're saying, oh my gosh, it has to go to like $45 a share, right? And that was when it was around $18, $17 a share. Now it's down, it was under 10 for a minute, under 9 for a minute. Now it's at 10.82 and then screaming down. We have a technical term in the industry for a stock that looks like this. You may have heard of it before. That's right. This stock has been monkey hammered. How long is it going to take to make up for this giant monkey hammer here, right? This stock from its peak to now is down 41%. To its very trough was down 53%. So let's do a little bit of math. For a stock that's gone down 53% to get back to its highs, what do you think it needs to go up by percentage-wise? I would say more than 100%. The stock has to double from this point, from its low to get back to here, has to go up 112%. 112%. Isn't that crazy? Even higher than you guys were thinking. Yeah. Over 100. It has to go up 112% to get back to where Chris said, get out of this stock. Crazy. Can it do it? It can. It has done something like that in the past. But here's the deal. This reminds me a lot of something I like to call the market cycle. You may have heard of it. Even Tom Nash has heard of it. Right? This is stage 1 on the left-hand side where it's consolidating. Stage 2 is this big run that all the YouTube geniuses, every once in a while they catch and they're like, I'm so smart. You have to buy this stock. I'm so smart. It comes up near the top where all the moving averages start crossing over. And your first indicator that something's wrong is a close under the 10 EMA, a red light right there, right? When did it close under the 10? Right there. When did all the stuff start hitting the fan? Right there. Weird. And then it's been going down. Stage 3 is sideways. Stage 4 is a downtrend. We are clearly in stage 4. We're in the denial panic stage to me on SoFi. A lot of people are struggling on the struggle bus down here on SoFi. So yeah, SoFi is not one I would buy even with your money. No way. But let's see just how great of a stock it is. And like I tell you all the time, right? It could be the world's greatest company. It could have everything going for it, right? It could be capturing so much market share. It could have the best earnings growth. It could have the best PEG ratio. Apparently for him, that means PEG ratio going towards the Gulf of America, but whatever. As long as all of your fundamentals are lined up, it should go up, right? Because fundamentals come out once a quarter. So the other 89 days of the quarter, they're meaningless. All that stuff's stupid. Everything between, each earnings day is just meaningless. Who cares about that, right? Who cares about the fact that, since this earnings date to this earnings date, it's gone down 50%, right? Who cares about that? Who cares about that? That doesn't matter. But please enlighten me about how great of a stock SoFi is.
Fintech company that has now amassed over 10 million users, a fully digital bank. And they offer a very, very wide range of products, unlike some very specific companies like Chime, for example. And each individual product line that they have is all growing. Now, in future quarters, they also are seeing website traffic that is blowing away what we're seeing in past quarters, potentially meaning that in the next quarter that they're about to announce, we might see an acceleration of new product adoption and member growth. And this is not at the expense of their margins. They're growing while also improving profitability from every perspective. And now this could potentially even get better, as one of their main growth vectors was going to be converting over to a new tech stack, which would allow them to not only save costs, but also put out better products faster. Speaking of tech stacks, they also own a company called Galileo, which is their tech platform. This allows them to offer banking services to other institutions and offer them a very modern solution. It's actually considered a market leader in this space. And
Richard asked a great question. Chris, do you think some of these talking heads get paid to talk about specific talks? I know for a fact that is a thing. That is totally a thing. In fact, I have a video on my channel. You could go watch it. It's called the problem with personal finance influencers, which I consider myself one of those, by the way. And it talks about them taking like buttloads of money to talk about these stocks. By the way, there were quite a few people who were taking $100,000 a month to promote was it FCX, right? The crypto platform that Sam Bankman-Fried was doing, right? I believe, now I could be wrong, that the Joker was one of those people who was taking $100,000 a month to talk about FCX. Now, I don't know for sure if he was one, but he totally could have been.
it also allows them to gain a massive data moat that allows them to then further their product adoption on their own platform. They also have been able to underwrite loans at such a great rate that they're actually underwriting loans for other institutions and making a massive push towards this. We can see this here in their overall amount of loan originations. And what they expect to see going forward is an even larger increase and total percentage of their loan book being originated via a service that has zero risk to them. So between both Galileo, their tech platform, and their loan platform, they get better underwriting, better R&D costs, the best technology, all by offering other institutions their special products. And they can continue to do this for an extremely long time without changing their strategy, as the total addressable market in financial services for the United States is one of the largest industries in all of America. We're talking...
Okay, so first off, it's FTX, not FCX. The second off, just did a quick Google. YouTube finance influencers hit with $1 billion lawsuit after FTX. Include Kevin, I don't know this person, Brian Jung, Graham Stephan, Ben Armstrong, BitBoy, I guess that's BitBoy, Tom Nash of all people. I'm gonna have to ask him about that. Erica Kullenberg. Yeah, hang on. FTX influencers, 100K months. What's this at? That's not gonna. Well, let me ask ChatGPT. Who were the FTX influencers who were paid 100K a month by Sam Bankman-Fried? Let's see. Oh, meet Kevin. That's Kevin Paffrath, I guess. Okay. I don't know. I remember seeing that somewhere and being like, whoa, I would love to get paid $100,000 a month to talk about a stock, right? Or, FTX in that case. And it's a real thing. It's a real thing.
Literal trillions of dollars worth of revenue. For our next bonus stock, we have The Trade Desk. And they're an advertising company that deals in one of the fastest growing total addressable markets in our modern age. Unlike some other advertising plays that might focus on one specific website, The Trade Desk buys ads across the entire...
Wait, TTD? TTD? The Trade Desk. Yeah, I remember. Oh my gosh, is this actually one he's promoting? No way. No way. No way. No, type no way in the chat. No way is he actually promoting this one. Because I remember specifically seeing this one. I think it was, I don't remember where I saw it, but being like, wow, that one got absolutely monkey hammered to death. No way. No way.
Entire internet. And they do this while offering advertisers a way to give out their advertisements across many different verticals. All of this with improved conversion rates, leading to better return on ad spend for brands.
This is a perfect example. This is a perfect example as to why it does not matter what the company does, who the company works with, what kind of product the company has. If the market doesn't want it, they will tell you. You need to stop trying to tell the market what the market needs to do, and you need to start listening to what the market is telling you. Because this stock is down 66% from its high right here. 66%. Not only was it down 66% in that time frame, but just since their earnings call, which is the last time data came out, it's down 45%. No way. You need to avoid this stock like it were like the bubonic plague. Okay. You need to avoid this stock like, let's think of things we could avoid the stock like. You need to avoid this stock like imagine this is like a comedy hour. Go in the chat. Go in the chat. You need to avoid this stock like a hot poker in the eye, right? You need to avoid this stock like a hole in the head. You need to avoid this stock like flipping some flapjacks. Yeah. You need to avoid this stock like AMD. There we go. All right. You need to avoid this stock like Richard's ex-wife. You need to avoid this stock like come on. The King Kong hammer. Yeah, good gravy. We're just going to do it for fun again. You need to avoid this stock like kryptonite. Well said. Good gravy. Theo says, Chris, I'm about to buy TTD as the drop from the cliff was about to lose guidance. It beat all estimates for 18 quarters. Dude, it can beat all of those estimates, right? Theo, and this is, Theo, I'm so stoked that you're here watching this, right? Because this is a perfect example of why I say only price pays. It doesn't matter how amazing the company is. If it looks like this, you ain't getting paid, bro. You ain't getting paid today or on Thursday or next week or the week after that. You ain't getting paid for ages. Holy moly. Wow. Goodness. How can you in good conscience, how can you sleep at night telling people this is one of the top 5, this is a bonus stock, one of the top 5 stock bonuses that you need to buy now? Could you imagine had you got your bonus at work, right? You in fact, this is order block right here from January 2003. It looks like it's finding support at. Tell me order blocks don't work. Imagine you got a bonus at work. You worked so hard, you know, all the blood, sweat, and tears, and you're like, oh man, I'm going to buy this stock here, TTD, right? And you're on this side of the curve while it's going up this beautiful uptrend, right? When did it close under the 10? Not for a hot minute, for a while, right? You could have green lighted in over here and red lighted in out of it right here. Right, you could have made the 80% in between. You could have made just in this little spat right here 17%. Yeah, not bad, right? And of course, you might have been chopped up a little bit here and there, but you certainly would have been out of the market well before this drop. Tell me I don't know what I'm talking about. Well before this drop, because the 10 went under the 20, price went under the 50, and at no point in time did it cross back up. And then what happened? Then the monkey hammer came to town, and it went down and down and down and down. Yeah, OPP plus FYF. Forget your feelings. If you're investing in TTD right here, you're doing so because somebody on the internet said it was a great buy because they're going to get paid and you're not. Maybe dude has a big sizable portion of it and he just needs you to help boost the price up. Maybe he needs you because he's like, if I pump this stock, maybe somebody will come and buy it from me. Bro, this is awful. This is the worst of the worst so far. This is not only is it not one of the top 5 stocks plus a bonus, it looks like one that I would stay as far away as you possibly can. Good gravy.
So just from 2009, they've been able to open up in many different countries, and yet this is not where the majority of advertising spend usually happens. About 88% of the trade desk spend is in North America, yet about 60% of the overall spend in the world is done internationally. And although they just did 33 quarters as a public company, only the most recent quarter did we actually see a miss on expectations on revenue. Now, this is no crazy miss. I mean, they still grew, they just didn't grow as fast as expectations. Profitability continues to improve and margins are getting better.
This is a perfect video. This is a perfect video, and I'm so glad I put this out. And no personal offense to you, Tanner, but this is why we do what we do, because there's all these reasons why the stock price should be great. All these reasons why the stock price should be millions and millions of dollars, right? But the problem is the market is telling you one thing, and you are trying to tell the market it needs to do something else. It's equivalent to standing on the train track while the market is screaming. It's blowing its train horn right at you. And you're like, no, stop, turn around. Stop. No. You have to go back up. This is where we stop when we turn around. We have to go the other direction at this point, right? You're going to get your backside run over for sure. We're going to skip. I don't want to hear any more words about TTD. We're going on to Robinhood.
A very fast growing company that,
listen, let's go back through his list real quick, right? There was Nvidia, which wasn't that bad. It needs some work, but it wasn't that bad. Then there was SoFi, right? Uber wasn't that bad either. SoFi, real bad. TTD, horribly bad. Let's see what the next one is. Robinhood. Okay.
advantage of all the uncertainty in the markets. But once you come over to the Robinhood platform, you're here to stay. And this is where Robinhood Gold is changing Robinhood for the better.
All right. Not bad. Not bad. Of all of them, this may be the best one so far. Your 10 and 20 50 has not quite crossed bullish just yet. However, huge change in momentum right here. Huge change in momentum. Now, it does have an order block right ahead, so it might struggle to get through here after about $46 or so. But this is not bad at all. This is like, do you see the difference? Okay. Do you see the difference in one here that's getting constructive, one that's starting to figure itself out versus, right? Like, look at thing one versus thing two. We see the difference in those, right? We can understand one of these actually does look like it has promise. The other one looks like it's putting on its bathing suit and it's going to go take a dip in the Gulf of America, right? We see this one actually has some promise here.
Whenever people decide to spend $5 per month, they get better APYs, lower costs on trading, and an entirely better experience with an amazing best-in-class credit card. The experience that you'll find on Robinhood is better than your traditional brokers, and even the banking side is looking to be better than what you could traditionally have at other banks. This means that during times of uncertainty, you see massive spikes up in their member counts, but yet those people are here to stay even whenever that uncertainty clears away. This is leading another sticky product to skyrocket during these times. Even assets under custody and revenue per user skyrocketing to the highest amounts we've seen in company history. And all while you're seeing this amazing growth, what you're not seeing is an increase in adjusted operating expenses. So more revenue and less expenses equal better margins. And that's exactly what we're seeing from Robinhood, getting extremely profitable over the last couple quarters. Now, in the famous rule of 40, combining the year-over-year changes in total revenue as well as the adjusted EBITDA margin, what you should aim for is a plus 40% to show off a very profitable and fast-growing business. Robinhood is at 106% as of the last quarter. And they continue to add on new products that are not eating into their existing business, only adding on new members and new revenue sources to just add on to their fast-growing rates. And the banking that I'm talking about is also another area of growth that they want to grow into. That should be by the end of 2024. And they're expecting lots of growth in this area. And this is just the beginning. As we continue to see more events coming in 2025, more products that are being announced at one of the fastest rates in all of the fintech industry. And the S&P 500 inclusion is right around the corner, forcing many trillions of dollars to be indexed to purchase shares of a company that potentially they haven't even looked into. Meaning that if they do get in, Robinhood share price will increase. My next stock in my top 5 is Alphabet, or better known as Google.
All right, another mega cap. Let's go look at the Goog. I like Goog versus Google. I'm not gonna make it a difference. They're basically the same. All right, this one also not the best, but nothing like the trade desk. Nothing like the trade desk, right? It's been going down for a hot minute. We know this. However, you've got your price over the 10, price over the 20, and if it continues on this trend up here, right? Because it's above the 10 EMA, that means the short-term trend is up. If it's above the 20 EMA, that's an intermediate term. If it's above the 20 EMA, that means the intermediate term is also going up. Hey, this might have some legs, right? Do you see? Hang on. Let's do a side by side. Let's do a side by side. Let's look at Google on the left and TTD on the right. And let's Goog. You know what? Just for posterity's sake, Goog L. I like Goog better, but whatever. And then TTD. All right. Let's look at these now. Let's go to the daily charts on both of these. Make sure it's daily. Yes. Okay. All right. Do we see the difference here? Right. Both of them in major pullbacks. Both of them in major pullbacks. We can agree to that. But one of these has found a bottom, looks constructive, and while it is still going down, does look like it has some legs. Versus the other one has been murdered. Call the fire department to come clean up this mess because this is awful, right? Both of them having pullbacks, but one showing signs of life, right? There's a heartbeat. The other one, like they're already digging the grave. Already digging the grave. In fact, let's do this again for Robinhood. Right? Another one. It shows some signs of life over here. Right? We see what these look like, right? And what was the best one? I think it was it Uber? No, I think Hood was better than Uber, but they look pretty similar. But we see the differences here, right? And the thing is that no matter what you say about the company, you're only going to get paid if price is going up. Johnson says he doesn't see a huge difference. Both are bad. They are both bad. I'm not saying either one is good, but if there's a good or a less bad, I would say Google is less bad than TTD.
Now, Google search is at a weird point in history now, as ChatGPT is looking to take users away, and a lot of people are saying they don't use Google anymore. However, Google is trying to combat this by adding in AI features directly into Google search while maintaining an extremely large lead in the search category. But my main focus for Google is their cloud platform, growing at one of the fastest rates in the entire cloud industry and placing them in third place. They can differentiate themselves here by offering some of the best AI tools possible to all of their cloud customers. And it's not like their other businesses are not growing either. Google search continues to make more money, as well as YouTube, or all of their other platforms and other bets that they're also making as well. Now, free cash flow is also spiking up, even though we're seeing their CapEx year-over-year growth going almost to 63% year-over-year. We continued to see free cash flow climb even past that. The spike up in capital expenditures was due to Nvidia purchases and them trying to build out their own data centers. And while all of this is happening, Google is offering their first ever dividend, buying back more shares, bringing down their total average weighted share count.
Okay, that's cool. They're going to offer their first ever dividend. That is pretty cool. That is actually pretty cool.
And just an overall distribution back to shareholders that should be nice while they continue to grow. And they continue to search for new areas of growth, just like Waymo. They own a massive share of this company, and they're growing very fast in the cities that they've started to approach, like Austin, Texas, and San Francisco. Also, quantum. If you're talking about areas of potential future growth, quantum is an area that every company should be excited about. Unlike the quantum-specific startups that need to find capital elsewhere, Google is extremely well-funded, and that allows them to go after these types of areas like quantum and feel absolutely no pressure that they are going to run out of capital ever. And speak of future projects, they're even getting into humanoid robotics, partnering with Apptronic and also taking an equity stake. And you can get all of this while being the cheapest company in the Mag 7, greatly below all of their other peers while still growing at insanely fast rates. Artificial intelligence is coming. This is going to make their company even more efficient, and they're in every single area that I want to be in for the future. For our next bonus stock, we have SharkNinja, a very interesting company.
SharkNinja. Oh, okay, those products. Okay. What is that one?
That's made up of two different that I want to be in for the future. For our next bonus stock, we have
SN. Cool. I didn't know that was publicly traded. SN. I just recently learned that Duolingo is publicly traded. I thought that was kind of fun. Okay, SharkNinja. No order blocks going on. Interesting. But it seems like it's also found a bottom. Maybe, right? Still nothing like TTD. I mean, TTD is such an example of something you've got to stay as far away from as possible. You've got to stay as far away from as possible. But again, this is still in a downtrend. Your 10, 20, 50, you're still pointed down. I can't in good conscience tell you that this is a great stock to buy, and certainly not one of the top 5 stocks to buy right now.
We have SharkNinja, a very interesting company that's made up of two different brands. One, Shark, that's built with cleaning appliances and different beauty products, and then Ninja, the cooking appliances, indoor and outdoor, that are growing faster than anyone could have imagined.
Dude, we got the Ninja coffee maker. We got the Ninja blender. We got the Ninja creamy. Yeah, the Ninja stuff's pretty good.
Ninja, the cooking appliances, indoor and outdoor, that are growing faster than anyone could have imagined. Now, between the two categories that they're in, they cover a larger and larger area of people's homes. They're growing in market share in every single industry that they are putting their minds towards, not just in the United States, but internationally as well. And the growth rates that they're seeing is accelerating faster and faster. For example, 2008 to 2024, we see about a 21% compounded annual growth rate. 2018 to 2024, 24% annual growth rate. And the most recent year was a 30% growth rate, accelerating the pace of adoption. And international, like I said, is growing even faster at a 34% compounded annual growth rate. But this is where the bear case comes in, or at least a lot of people suspect that China is the main manufacturer of a lot of their products. And this has led the company to sell off massively recently due to tariff conversations. And now you'd be able to get this company at one of the cheapest rates at only a 23 times.
Again, we'll go through this exercise again. This is the same price as it was in May of 2024. If you own an asset, if you own an investment and seeing the same price that it was a year ago, you're not a happy camper. You're not a happy camper. No way. This looks like it's peaked its market cycle. I'm going to get on. I'm going to see. Is there another one here? Amazon. Okay, let's get to Amazon. Amazon. Oh, yikes. Man, I feel like he just went like, all right, let me throw some darts. Which ones are in a downtrend? We're just going to go with those, right? I don't know. Amazon again, 10, 20, 50s all pointed down. It's recovered quite a lot, but still it doesn't give me warm and fuzzies like some of the others have. This is just not all that great. So here's what I want you to do. I want you in the chat to type in, what did we learn from this video? That's what I want to know. What did you learn from this video? What did you learn from this video, right? It's one thing for me to come on here and you know, complain about every single person and be like, oh, they got terrible picks, right? They do. These are terrible picks. let's not get that mixed up here. These are terrible picks. But what can we learn from these terrible picks? That's what I want to know. That's what I want to know. Theo, only price pays. Right. Manuel says, not much. That's okay. I'm trying here. Don't listen to the pitch guy. Yeah, only price pays. Avoid such YouTubers. Yeah, I mean, like, legitimately, where in the world do you get the cojones to look at this and say, this is one of the top 5 stocks in the market right now? Are you kidding me? Your credibility is gone at this point. Your credibility is out the window. I mean, this is the same price it was in 2023. So it has to be a great price today, right? It's not how this game is played. Yeah, pick your own stocks. Don't get married to a stock. That's a good one, Barry. Barry, thanks for the comment, by the way. I don't remember seeing you here before, but dude, I am stoked that you're here. He says it's garbage. Carol says there's a conflict of interest when they recommend stocks. Bill says exercise patience and wait for the stock to get back into a legit uptrend. Yeah, exactly. Buy stocks as they're crashing up, not as they're crashing down, because I'm telling you, there were people who said, this I'm sure happened. There were people who said TTD at $84, $83, at $85. This is such a great buy. Can you believe we can get TTD for this price? And a couple of weeks go by and they're like, oh man, I loved it at $85. Now I love it even more at $70. What a fantastic opportunity to get into this stock at only $70. And then a couple of weeks go by and they're like, oh man, can you believe I'm such a genius? I'm going to steal the stock basically for $60 a share. A couple more weeks go by and they're like, boy, you know, that $80, that $85 was whew, that was a hell of a price then, wasn't it? Because now it's down at 50 or under 50. Boy, maybe that guy on the internet, that random guy talking about how only price pays, maybe he was onto something. Because just since this point here, I'm down about 40% so far. Yeah, this is a good stock, right? I mean, it should go up from here, right? It can't go any lower. That's the worst one, when people start screaming, it can't go lower from here. It certainly can. I think 0 is usually the floor where it can't go any further. The market dictates what it wants, not how wonderful a stock appears to be on paper. Yeah, the market's going to tell you which direction it's going. All you have to do is listen. Only price predicts the market. Interesting. Hopecast says, take my money and yeet it into the sun. Yeah. Excuse me. That was a good one. Carol, that's a great right there. I lost a lot of money doing exactly what Carol just says, trying to trade counter trend, right? Trying to catch the top, trying to catch the bottom. Trying to catch the bottom caught a lot of people in TTD to lose 40%. 40% just in the span of this quarter. Yikes. I checked on Robinhood, and their guys are saying to buy TTD at like 84%. So it speaks volumes. What are they doing? Maybe they have an agenda, and maybe Tanner has an agenda, right? I don't. My agenda here is giving you the world's greatest YouTube videos that are better than most people's paid courses. And this is why I like to watch these, right? Because even though I disagree with basically everything Tanner talked about, we learned a lot, didn't we? We learned a lot. Like Theo says, patient for price to move above the 10, 20, and 50. Yeah. Eric says, be aware of people getting paid to push stocks. Fundamentals don't matter at all. This is my perspective. This is my perspective. I couldn't tell you anybody's earnings per share. I couldn't tell you anybody's, PEG ratio. When I think of PEG ratios, I think of something completely different. And I think the people who own TTD are figuring that out too. When I think of earnings per share, I don't know. I don't care. I don't care at all. Because only price pays. By the way, I am a random guy on the internet, but my name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time, who would absolutely smack you in the face sideways if you said, this is a great stock. They would look at you like, what is wrong with you? They would look at you like you had 3 heads on your shoulders. Sorry. I've been successfully trading since 2009, and this is where OVTLYR is like a save time, make money, and start winning with less risk together as a team. So go ahead and subscribe if you haven't already. Now, real quick, we got to talk about OVTLYR 3.0 coming out this week, which I'm so stoked about. We want to share with you OVTLYRdeal.com, where you can win $1,000 and a free year of OVTLYR 3.0. All you got to do is head over to OVTLYRdeal.com, and then we have several things that we'd love you to share for us, right? Maybe reposting a couple things, maybe tag us on Instagram, maybe leave us a review. Any one of these things will get you points entered into this contest to win $1,000 and a free year of OVTLYR 3.0. And we have leaders like Deep Thought was somehow hacking us with 237 points, and Nikolai with 192, close behind him. But listen, it's still a raffle at the end of the day. So even though these guys have 237 points, you still have a chance to win. You still have a chance to win. Grand prize, $1,000 plus OVTLYR 3.0 free for a year. First runner-up gets $200 worth of OVTLYR swag and my 5 favorite trading book bundle. And second runner-up is $150 worth of merch and my 5 trading book bundle. So you want to head over to OVTLYRdeal.com so you can sign up and you can get that. So real quick, let's take a look and see what the market is telling us today. What is the market telling us today? And then we're going to bounce. What is the market telling us today? So firstly, we start with the market and let's look at the trends right here. This is a similar situation for a lot of stocks we've looked at. So a couple order blocks down here helped bounce it back up. Plus, a couple of golden throne tweets as well. Now, the price is over the 10, which means the short-term trend is up right now. Let me show you my cheat sheet. Here. It's the indicator of the short-term trend. Now, a 20-day, if it breaks over that, means it has basically gone over the reversion to the mean. Reversion to the mean. If it can break over the 20, that's a great sign. I don't know if it's going to do that. I don't know if it's going to be today. It's very possible. And then the 50 is not too far off. So I could absolutely see if we have a few more constructive days, this looking a lot more bullish. And that's when I would say buy stocks when they're crashing up versus when they're crashing down. But I'm not to that point yet. Not at all. But a couple other things that are showing me that we've got a lot of constructive things going on under the surface is if you go into OVTLYR and you look at our bull list versus our bear list, we have 76 new buy signals today versus only 8 new sell signals today. That's super constructive. We have buy signals on Blackstone Secured Lending Fund, on China Overseas Land and Investment Limited, on CyberArk Software, on Dole, on Edison International, on Edgewise Therapeutics, 76 new buy signals. Now, this feeds over into our market breadth. And this measures how many stocks have buy versus how many stocks have sell signals. You can see this has really hit a bottom and is starting to gain momentum here. Definitely has this bullish cross right here. So while the market is still trending down, the constituents within the market, the 500 stocks within the market, that breadth is growing. So if we're to look at what that means while the market is still headed down, more and more of these stocks are starting to scream buy, buy, buy. You know, once those start screaming the buy signals, more and more of those are going to push up the market, which could help push the market up even higher. So that's my bullish case. We're still in a downtrend, but that is my bullish case right now. So be sure to come back this afternoon where outliers like us will save time, make money, and start winning with less risk. Now, YouTube is going to pop up a couple recommended videos. I recommend you watch one. I also recommend you come to this afternoon's live stream, and I'll see you there.